Welcome to this webinar. In a moment, I will hand you over to Brodie Good, CEO and Technical Director of Alien Metals, who will run through a presentation to give an update on the progress they've made on their projects since our last webinar. After the presentation, Bill will be available to answer questions. If you'd like to submit them, then please use the right hand of the screen. Right now, let's hand over to Bill and his presentation.
Good afternoon. Welcome to Alien Metals corporate presentation here in a wet October day in the UK. Thanks for joining us. And I'm going to talk today, focus a little bit on our Hancock iron ore project with the recent results of the initial scoping study work done, but also run you through obviously our other projects, give you an update on where we are and how we're progressing. So disclaimer, competent person statement. And just to say, we will put this presentation up on our website probably tomorrow morning so that you can at your leisure have a look through if there's bits you've missed. And also at the end of the presentation, we'll have a Q&A. So if you have any questions, please ask and I'll do my best to answer them. We are, we're working hard. It's been a difficult, interesting few months on the commodity resource sector, but we like to think we're holding our own and moving in the right direction. Board of management, same core team. Dan, our chairman, based in Perth, which gives us that sort of Australian permanence, which is a great asset. Myself, I'm based in the UK. Obviously, I would be more in other jurisdictions as and when possible, and I'm hoping to be able to do that more next year once the restrictions from the pandemic are reduced. With Mark Colbert, another co-director who's based in the UK as well, more on the commercial side, legal, but adds great sort of complementary skills to the pot. Howard Baker does the resource work, has been doing the resource work on the iron ore specifically. Great asset, great experience. And more recently, Joe Battersill has joined sort of on a corporate advisory capacity. Joe comes from a geologist background. He started working, I believe in Australia as a geologist, but then moved across into more corporate finance-based roles, again in Australia and the UK, North America. So brings a wealth of new experience and support to the company, which I think is all great assets. As you may know already, we have a multi-commodity portfolio. So in Australia, we have the Elizabeth Hill silver project with the associated Money North permit sort of wrapped around it. So that's silver, nickel, copper, PGEs, and I'll talk about that a bit later. And, at the moment, the iron ore, the Hammersley project, the Hancock and the Brockman tenements, which we'll talk a lot more about in a minute. In Mexico, we have the two silver projects, Los Campos and San Celso. Not to be forgotten at all. Still great amount of potential in those. We have been working hard and we will be still working on those as soon as we're able. And also the Donovan 2 copper gold, which again is a very exciting project that will be worked up. And we have our zinc project in Greenland, which is, on not quite on the back burner, but is ticking on in the background, and we're looking at options on that one. So really the main commodities that we're involved with and we're working on, obviously iron ore is the big one at the moment. Without going into too much obvious detail, key component and obviously construction, steel making, the global issues from the pandemic and the infrastructure growth that is planned and seen and will happen. Steel coming from iron ore is one of those core materials. It's steel and it's concrete. So the demand is there, especially for the high grade, the DSO, direct shipping ore grade material, which is what we have and what we're focusing on in our two projects and to date on Hancock. Obviously, a big price fluctuation recently, but settling back down. I think today was around 120, 123 US dollars a ton, which for our project, and as you'll see, is absolutely is very much in the ballpark and keeps us incredibly economic as we move forward. And then silver is the second great commodity we are fortunate to have and be working on. Again, fantastic long-term outlook with the EV, battery electric vehicle technology, solar panel technology, all those things, and also, as importantly, I think the healthcare. Something I only learned about recently: the use of silver thread in the manufacture of PPE materials and clothes and uniforms. Really interesting. And from our point of view, it's maintaining strong levels. You can see from the graph, it's stayed up consistently for several months. And with the global changes and the drive to renewable energy, this silver's we feel it's got a great future. And also these days, it seems to be people are putting silver under, a silver bar under the bed, whereas historically it might have just been a gold bar. There's now demand for silver. So the Hammersley Iron Ore project, so the Hancock project has been our focus. We've had be able to get on the ground, do some drilling, and in basically 21 months, we've gone from a sort of quite detailed starting research and review of what was very little done on the project to announcing our JORC compliant inferred resource, 10.4 million tons at an average of 60.4%. Fantastic result. I think we were extremely encouraged by that. And I think I should state here, and I'll probably say it several more times during this talk. It's the initial resource, and we feel there's more to come, a lot more to come on Hancock, let alone on Brockman. And it is direct shipping ore, so it's that sort of peak of the iron ore product. And the recent scoping study has given us excellent economics, as maybe you've seen from our announcement this morning, but talking a little bit more on it today. So there's the outline of the resource estimate. You can see it's broken down to the three main deposits, so Sirius Extension, Ridge E, and Ridge C. And so that's again, that'll be in the presentation. You can have a look at your leisure. Like to show you a little video that just maybe puts a little bit in perspective. So there you can see the three deposits, and we'll just have a spin around and have a look at Sirius Extension tucked in there. So yeah, nearly 8 million tons at 60.1%. And then we come back round and to on the western end of the tenement. So we have ridges C and E as part of the Western Ridges target area. We work these up very quickly, and now, as you can see, I mean, they both combined about 2.6 million tons at give or take, 61.5%. But if you look significantly, 600 meters, 900 meters strike length. But now let's go along those ridges, and as you can see, these ridges go 4 kilometers. We've sort of mapped out approximately 9 kilometers just of ridges C and E. And if you look to the right of the screen, you can see there's a whole nother series of ridges popping out parallel that we feel have identical geological components, and therefore the potential to host significant more direct shipping ore grade material. Now, again, a bit more detail. So the mineral resource statement was restricted to material that falls within the optimized pit shell and within the tenement boundary. As you can see here, the green line is sort of the tenement boundary, and then you have the pit shell and the ore. This is for Sirius Extension, and we're sort of looking northwest. when during the scoping study, they ran, again, they re-ran the pit shell using $100 US dollars a ton as a sort of purchase price. And again, fantastic result, because basically we're being told that still the complete ore body is to be extracted is your optimum mining plan. So we don't lose anything at $100 a ton. And we've even gone a little bit lower, and we're still pretty much staying at the same optimum mining. Very low strip ratio. And I think what's also very significant is the capex requirement for this sort of project is, again, extremely low. If I go here to the next, sort of, there's a bit more of a summary of where we stand with some numbers. The image is showing the the Ridge C and the Ridge E sort of pit outlines. So one point I'd make, just talking about those, is these are ridges that sit above the sort of the background surface, and the ridges are the top of the ridges are essentially the high grade material. So if you can imagine, it's sort of like a giant cheese grater. You take the top off, and pretty much all of that is your material, is your product. So you're not having to dig big holes and move do sloping walls or anything on the ridges specifically. So strip ratio is near one. I think it's 1 to 1.04 or 5 for the ridges, and a little bit more for the serious extension, but still incredibly low, which of course factors into your costs. The scoping study returned a less than $60 US FOB to the Port Hedland in this case, based on near identical parameters and costings of a very similar project in Western Australia that is already in production and doing extremely well. And they've done, I have to say, an amazing job on that project. And it's something we feel puts us in a very strong position to use that as a basis and for us to show that it works. And the FOB includes all the mining costs, all the transport costs, all the royalties, and the costs of port. And don't forget, I'll show you in a second, but we don't have to build a railway. We don't have to build a port. We don't have to build a massive great plant to process and as traditionally you imagine a mine site has a huge great processing plant. We don't need any of that. I think in the announcement we mentioned about the fact that you have mobile screening and crushing unit. Surface miners can potentially do the job. So you've actually just got a completely mobile mining process that is then able to run up and down, for kilometers without building great big infrastructure systems. Looking at the moment about a 1.25 million tons a year mining schedule, with probably the first year of a half production just to sort of get things rolling. But even at half production, if you do the maths, and say iron ore still running even at 110 or 115, and it's costing you less than $60 a ton to get to port, then you're still going to have a good first year. And as I pointed out there, capex, less than 30 million US dollars, incredibly low. And once you're up and running, that'll be repaid in a very short space of time, and then you'll just sort of basically, having profit on a regular basis. So, as I said earlier, the ridges, they're the ridge tops, so they have very little strip ratio, easy access to the material, and as I said, conducive to surface mining units, very mobile, very efficient. FMG, I think, use mobile mining units, and there's if you look up a little bit on these sort of machines and how they operate and the costings, hugely beneficial. And to be honest, going forward, if we can, as development comes in and we can, they develop electric or battery powered type units. You have a solar plant out there somewhere collecting the sun's rays, storing it, charging up these machines, even better. So, great. great opportunities here, I think. And as I said, mobile screening, crushing, and you can see the trend. So the yellow sort of lines are sort of the trend of the ridge, which, as I said before, and from this, again, from the video and here, you can see there's a huge amount of area that we just haven't even touched yet. So you've got, we got 1.5 million tons on Ridge E for 1.2 kilometers, but Ridge E runs for 7, 8, 9 kilometers. So, the potential there is huge. And same with Ridge C. That's almost a little bit less, we've only covered less than a kilometer of it. As you can see, the sort of green dots show where we drilled, and the rest is all completely untouched ground. And so we're really excited to getting back on the ground, hopefully in Q4. So hopefully got a team going up next week to start, marking up some next holes for the next phase of work. Really excited about that. Here's again another little video more on the logistical side. So you can see the tenement. The red dotted line is sort of our way out, our access onto the Great Northern Highway. And you can see all our neighbours all around, who hopefully are looking in with a bit of jealousy. They might be knocking on our door soon. So there you can take the Great Northern Highway, 435 kilometres. It's all there, straight up. If you haven't been to that part of the world, definitely worth a visit. It's quite a scenic trip, all the way into Port Hedland to, there it goes, Utah Point berth, which is a public berth. So again, as I mentioned before, the FOB costs include getting the product to this berth, and then the client brings in their ship, whichever one they want, be it 100,000 tonner or 500,000 ton, it's up to them. We pay the fees, and off it goes. The product goes to market. So very exciting. And then let's not forget Brockman, further west, the Brockman tenement, historical two BHP targets on the edge of the tenement. The third one, the BHP 15, just to the south. However, very interesting. This one's quite different in terms of its potential source of mineralization. It's more these Kanga type deposits where it's reworked, originally very high grade material. It's then broken down, sort of sedimented, moved around, and then repacked together, and often runs as high, if not higher, than the sort of original material. And as you see from the limited work we've managed to do there, with access rights and everything else, 65% grade iron ore is pretty much as high as it gets. So we're very excited about that. We are doing native title work is coming up before the end of the year, and then so we can push ahead, get the right permitting done, and for next year we'll start working this one up as well. So not forgotten at all. Again, this is from previous work. We still believe that's the case, and we will still be working this up. So we'll keep everyone informed. And it just still we feel has is still a great asset that needs to be that is the next one off the rank, so to speak. So pop across to Elizabeth Hill. So here again, a little video. As you might know, we like showing videos, but sometimes tell 1,000 words. So this is a historic video from when in the days when it was operating and only ever as an underground mine. So this is from around 1998, 99. We're not exactly sure, but there you go. In the day, off he goes down the shaft. We're trying to work out who that is. So this is in one of the levels. As you see, the PPE requirements in those days were a bit less than they are today. Here they're having a look at the face. So that's the ore body. You can see there's all sorts of alteration and veining and incredible from a geological point of view. There's veins of probably pure silver in there. You can see, just taking a piece off, having a look. So that's Yeah, it's very exciting, and part of the reason of showing this is some of the old drive. We are in the final throes of agreeing a deal to reopen the mine, so to dewater it, tidy it up, get back down, and then be able to assess from underground, because we know there's significant amount remaining, to help us on the next level of work. In the meantime, and again, this is all to look at your leisure on the presentation, or there's information about this on the website as well, of course. It was an incredible deposit, it still is. We know that, you know, they only, again, as a recall, sort of 1.2 million ounces was extracted in the short mine life, and just from the core deep underground high grade material, from an original 4 million ounce resource. Part of the reason they stopped mining was silver was at $4, I think, an ounce USD. I think today it's 23 and a half, so significant upside. And for us as well, there's a copper, nickel, cobalt, polymetallic halo associated with both the ore body, but the location of the ore body within the Money fault. And as you may recall, we have been doing a drilling program which has just finished the last few days. And while we compile the rest of the data, I'll show you a few images. If you recall, we recently did a sort of a regional airborne magnetic survey, compiled old data, did some new flying, new material, new data, combined it. Southern Geoscience did a great job, and came up with, you know, 22, 24 targets, which is fantastic, and gives us, again, there's a lot to do, a lot to get on with. The Money North exploration license, which is the one that wraps around, is you know, loads of opportunities, and you know, we're getting on with it. And as I say, we've just finished a drilling program, but just finalizing all the information to share with everyone. But in the interim, here's just a few images. This is a bit of a surface sample from Conquest, which is one of the prospects on the Money North tenement. You can say it's fantastic azurite, copper, really interesting looking material at surface. Again, all needs following up. Here, again, a sample from an ore, either of ore from a low grade or a waste. I mean, even waste dump seems crazy when we haven't had the assays back on this, but you know, potentially this could be running 100, 200 grams a ton silver, and it's yet in the waste dump, which is just which gives you an impression of the overall, the average grade of the main ore. But again, and here's some of the core from this is our first hole in the shallow northern end of the deposit that's never been mined, and you're looking at, you know, you're getting 1.4% silver reading on a handheld XRF at 6-7 meters below surface. Incredible. And again, old reports talk about the oxide, this sort of shallow part of the ore body resource being probably under drilled and under tested, and therefore several reports talk about the resource probably being very conservative, that there's probably a lot more silver present than has been sort of defined. And to be quite honest, we significantly, there you go, there's a beautiful piece of silver in a piece of core. That's hole 3. This hole, again, was in the shallow part of the ore body. You can see on these are only XRF readings, so, you know, be very clear, they aren't definitive numbers, but as an indication, incredible numbers. You know, 1.5% silver at the last part of the hole, and sadly the hole, we didn't complete the hole as planned. We only got to, I think, 26 meters due to the material, you know, the ground being very difficult, the hole collapsing, but just incredibly encouraging. And this more we talked about the nickel, the cobalt, the copper. This is from a hole from the eastern side going into the ore body, but testing that halo. And again, we're seeing some fantastic there again. I mean, it's visually very impressive. Again, these are XRF readings, so they're not definitive, but 0.75 nickel, 0.6 copper, and 390 grams a ton cobalt as a reading, even if we're within the ballpark. And this is again on the halo around the silver. This is before we've even got to the silver ore body. Very exciting. Lots going on there. And this is just in case you haven't seen, from an RC, a reverse circulation style of drilling. This is one of the ways you record the material not for posterity, but for as a geological record, to visually see. You can sometimes work out, you can see some changes, geology changes, color changes, alteration. So just from that was from the second RC hole. So yeah, loads going on in Elizabeth Hill, loads to do, very exciting. So our Mexican copper, silver project, San Celso, still extremely excited to get drilling there. We've had more meetings the last couple of weeks. The pandemic's been pretty hard. It's hit hard in Mexico. They've had, the vaccination rollouts very, very limited. It's still a difficult place to have group sort of community meetings, but we are working hard with the community, looking at ways that we can support the community in terms of ESG, social things that can help, that will also bring the community over the line for us to get on with drilling, and then get the government, get the necessary permitting in place. So still really looking forward to doing San Celso, Los Campos, same thing. I mean, these are still incredible projects. Frustrating where we are, but we're still working hard to get those over the line and get to the next stage. Donovan 2, back now, we're just finalising our updated drill permit so that we can go and drill essentially that Los Alamos target, where the if I go to the next slide, that's a piece from the Los Alamos, from inside the well, that ran 3.3% copper. I mean, it's fantastic from a geological point of view. Lots going on, lots of veining, lots of alteration, something significant's going on there, and running 3.3% copper, obviously something significant's going on. So we're looking forward to getting to properly, we feel, better testing the system to find where that's coming from, the source within Donovan 2, to move the project forward. So hopefully that's given you a heads up, a little bit of where we are and what we're doing and where we're going. Please, if you've got any questions, please, drop me a note. I'll answer them as well as I can. As I say, the presentation will be on the website tomorrow. There's a lot more information on the website, a bit more detail if you want to have a read. And thank you for your time.
Excellent stuff. Well, Bill, that was the easy bit, just the talking to yourself. And now it's the questions. We got questions coming in. You can submit them, by the way. And we've had a lot more than I'm going to ask, because some of them sort of replicate each other. But let's get through them. Let's start off. Okay, Bill, what are the cash costs and expected margins in dollar per ton on the current iron ore price? Where is the price at the moment, anyway?
Hi. Yeah, the price at the moment today was around 120 US dollars a ton for the DSO, the high grade material, which is obviously our focus product. As I mentioned, from the scoping study, we're looking at just below 60 US dollars a ton FOB. So basically from removing it from the ground, getting it to the port, getting it basically loaded onto a ship, in the region of, or not more than, $60 a ton. So, at today's rate, if we're selling it at $120 a ton, we're making $60 a ton for, say, first year production, 500,000 tons, second year production over 1 million tons. that's a significant amount of money, a profit, because again, remember that $60 a ton is profit at $120 off on today's price. Drop it to $100 a ton, where it's been recently, we still, in the region of $40 a ton on, say, 1 million plus tons a year. That's still $40 million profit on top of all the operating costs, royalties, everything, which is quite substantial, really, for we feel, and that's only where we are today with Hancock.
Yeah. And quickly on the iron ore price. I mean, obviously, like you see it go a bit higher there. But where do you see it? I mean, any idea of where you think it's going to? What's the consensus of where the price is going?
Honestly, it depends who you talk to. You could talk to some analysts, and they'll say the price is going to keep going back up. Others will say, well, it's going to stay stable at this number. Others, maybe with a bit more doom and gloom, will say it's going to come down. It's a really hard one, but I think what's fundamental to our project at the moment is, with the work we've just done, running the numbers at $100 a ton, which is still, substantially lower than it is at the moment, and still getting such great results, such good, basically, we're told we need to mine the entire ore bodies at $100 a ton and still come out with a very nice profit. It's fantastic. So, yeah. We don't know. No one really knows. But I think, globally, expansions we've got to develop. There's a lot of work, and the main products for construction going forward is iron and cement, concrete. And iron comes from, steel. Sorry, comes from iron ore.
Yeah. Okay. Well, that's question one then. Right. Let's go to the next one. Have any other similar projects worked in Australia, e.g., companies with no rail trucking to port?
Yeah, absolutely. I think, and that's sort of not what alerted us, but what when we started working on this project, and we looked around and we thought, well, hang on, you've got companies like Phoenix who've done an incredible job. They've turned around from a maiden resource to being in production. I think they started production earlier this year. ASX listed company, and they're doing pretty much what we're planning to do. But they're already doing it and proving it works incredibly well. So they're mining, they're taking a deposit, they're trucking it. It's high grade material. They're trucking it in trucks to the port. I think they're going to Geraldton, so that's sort of central Western Australia rather than the northern Pilbara area, and same sort of distances. And I think if I recall, they recently released a quarterly with fantastic income. And prognosis for the future. So, yeah, very much so. It's now honestly a tried and tested and very much working project potential that we see works. And from the work we've just done, it does work. You put all the numbers in, and it's still very much a great economic project.
Mm-hmm. Next question. 10 million ton resource to date. What is the potential size of Hancock, and what about Brockman?
Well, yeah, again, as I touched on in the presentation, and I think very important, we've really not quite scratched the surface, but in terms of the ridge systems, we've maybe tested in total a couple of kilometers worth of what could be 10, 15, 20, 30 line kilometers of ridges. Hopefully in the video you notice there's that point as we're sort of traveling along the ridges, the extension that are completely untested, but on the right hand side of the screen you can suddenly see more and more poking out these ridges, which would look very much, and they probably are, repeat iron ore beds at surface. So Hancock, I can't put a number on it, but I think we've got a significant upside at Hancock still, and that's why we're going out to do some more work very soon. Brockman, still it's got potential. It's a different type of iron ore. It's more this detrital, where it's re-cemented, originally very high-grade material that's got moved around and then re-cemented, but actually often comes in higher grade than the original product it came from. And we know that, BHP, I think, and Rio have been drilling up to our boundary to the south for this exact same type of iron ore. If they're going drilling, they're not going to be doing it, on a whim. They're very well managed and controlled, and they know what they're doing. And we have a sense that we will have potential in Brockman as well. Numbers and stuff, I can't, until we get out there and get some holes in them at some time next year, I can't really say. But yeah, I think still lots of potential.
Yeah. Okay, Elizabeth Hill drilling. How has that gone? Have you intersected silver and other minerals? And also, I may as well put this one in as well. Expected timing for each drilling assays.
Yeah, okay. Again, as I mentioned, and I showed a few slides there, a few images of some of the material we got from the drilling. We have just finished the drilling program, the inaugural program. We completed some core holes, diamond core holes, and you saw some of the core, some beautiful intersections of pure silver, and also significantly some sulfides, quite a lot of different sulfides, more associated with copper mineralization, nickel mineralization. All these, though, of course, as I said, and I'll say again, are based on handheld XRF machine readings. They're not final laboratory analysis results. So they are, I don't think speculative is the word, they're indicative. And so we had some excellent intersections, as much in the core, which was focused on the historic ore body, mainly in the shallow northern end of the ore body. And we found, I think, higher amount of silver than we expected, and that was recorded historically, and also at deeper depths, which were outside of the original historic resource model. So yeah, we're really excited by what we found to date. Results, it's a huge pressure on the system in Australia. Western Australia sort of had the doors shut for several months now, so they are limited in their ability to just sort of produce the usual amount of output. We've been promised six to 7 weeks. The core went to the lab probably 2 weeks ago now. So I'd like to hope middle to end of November, next month, we start getting the first results back. And yeah, really looking forward to that, because I think that's really going to add some real knowledge to what we're doing, what we think, and then also to help the next stage of work.
Mm-hmm. Yeah. And in fact, this next question is, what do you think the potential lead time to first development could be?
I'm assuming we're back at Hancock at the moment. Look, there's quite a lot of work to be done now in terms of the usual process. There's permitting to be done. There's environmental studies to be done, heritage, native title studies, to convert the current license, which is an exploration license, into a mining license. But we've got some great, I think we mentioned in the RNS, Lloyd Edmonds is sort of joined team in Perth. He's got some excellent experience from previously working with Fortescue, major group in the region on iron ore. So he's driving the ship on a daily basis now for us. And, we'd like to say, I'd love to say 12 months, but I think let's be realistic and say 18 months from now, if everything goes well, to be in that position where potentially we can put the first shovel in the ground, or the first surface miner starts trundling along, one of the ridges.
Mm-hmm. Yeah. And before that, when do you think you'll be in a position to commence the environmental baseline and overall permitting work?
Well, all those sort of things we can start as soon as possible, really. I mean, all that work, there is some work already done. Obviously, you need a certain amount of information and permitting before you go drilling, before you are able to do that sort of work. But we can start, a lot of those studies can be started, we just need to press the button. We are talking to a couple of groups who specialize in that sort of work. Once we found the right group, the right that we're comfortable with, that obviously is cost effective, but we feel will give us the result we want. in a costly and time efficient manner, then we can push the button. So those can all be done. There's this whole series of research and reporting that can be done, concurrently in the background.
Yeah. At Elizabeth Hill, the project is in close proximity to the Money PGM deposit. Is there potential for metals around the EH deposit?
Well, yeah, I mean, it's sort of all, it's all this big sort of all associated with this money intrusion, which is a geological phenomena where this large different type of rock is intruded, sort of gets shoved into the existing ground, and the money intrusion also, well, it hosts. There's a platinum group metals PGM deposit defined many years ago and still there on the money project area, and part of our land package, both at Elizabeth Hill, but as importantly, the Money North exploration license we picked up that surrounds it. There are historical platinum group metal anomalies, and there is some exposure of what's called the Hunter's Reef, which is associated with the main money deposit that's not on our ground, but this reef system carries on for quite a few kilometers and does crop out inside our tenement. And if you recall on the presentation, there's the image of the aeromag targets done by Southern Geoscience, and several of those targets are associated with that PGM hosting a reef system within our license area.
Okay, cool. And you covered bits of this. Last one here. It would be fantastic to understand what the process will be going forward to go into standalone production in Hancock.
Well, I think as I just already mentioned, we need to get the permitting done. So there's obviously there's in the background, there's the permitting, environmental, social, economic, native title, flora, fauna, all those aspects. And then on the technical side, someone like Lloyd, he's already driving the ship. The planning we talked about, surface miners, mobile crushing screening plants, say some road construction that's needed. But as importantly, getting potentially a third party engaged and ready to move as soon as we can press the button. On a technical side, on my side, sort of in a way, my focus would be getting the next phase of drilling done so we can start expanding, hopefully, the resource tonnage, updating the resource from inferred to indicated, for example, doing some density work. So we need to do some diamond core drilling just to get those final detail to really get the resource to the next level of competency and confidence. But also, as I say, I think as importantly, find the next 10 million or 20 million tons within Hancock itself. So lots to do, but it can all be done concurrently. And really exciting times, I think, for the project.
Yeah. And finally, just working in this environment, like I suppose by now you've popped over there. Whether you can pop over to Australia, I don't know, but you would have popped over there. I mean, how are you finding it? Is it difficult, or was it surprisingly quite easy, just communicating electronically?
Look, I spent most of my career standing on drill rigs and walking over ridges and taking samples.
Recording in progress.
So I do find it challenging that I can't be on site with the teams, because I sort of personally, I like to sort of lead by example and be prepared to be out there. However, I think we're really lucky with Dan, our chairman, based in Perth. That's a great asset to have because he's right there and he's been able to do a lot of stuff that that without having him there would have been much harder. We've had some good support from various consultants out there. So yeah, it's frustrating, but I like to think we do have a good team and people have been working really hard, and we're able to communicate really well. I mean, when we're drilling, we have a daily conversation on WhatsApp or albeit sometimes on Zoom. and one's able to stay in touch with people. So I'd much prefer to be able to just pop down there for a couple of weeks, do something, and I'm hoping to do that. You know, realistically, at Easter time, probably next year, when things have really settled down a bit more and it's a lot easier to do. I'm sort of, you know, I'm almost booking my ticket now to get down there for a month or so and really spend some time on the ground with everybody.
Yeah, but generally, I mean, you're happy with how things are going, Bill?
Oh, I think I'd like to think so. I mean, if you think where we were 16, 15 months ago, 20 months ago, Hancock and Brockman were a concept, were very new to Alien. They had a couple of drill holes in them and very little else. We did a big desktop study. We had a few guys on the ground for a couple of weeks, and then we sort of took the plunge, got the rig out there, drilled some holes, had a fantastic first phase, went out, took the risk even before we had all the results, and sent the rig out again and did the second phase. And here we are now. We've got a 10+ million ton MRE of DSO grade material at over 60%. We've got a scoping study, an initial one that's already telling us this project is really strong. And at Elizabeth Hill, we've just done some really interesting drilling. We've had amazing, I feel geologically really interesting information from, you know, this sulfide system, this halo. We're hopefully going to get that old mine dewatered very soon, get it cleaned up so we can get back down. And I think that's going to be fascinating when we get back down and really see what's what to move forward, and let alone all the other targets we've got on the Elizabeth Hill project and the Money North. And, you know, last but definitely not least is those silver projects in Mexico and Donovan 2, the copper gold. They're, you know, it's frustrating that we haven't drilled them yet, and we are working incredibly hard. My guys are having meetings and working as hard as they can to get us to that stage where we can put some drill holes in those, and start getting them back on track as well. So I think it's been fantastic considering the pandemic that the world's been in. I think we're in a very fortunate position for all of us, and you know, I hope that everyone is safe out there and comes through this, and we can all get back to some sort of normality and move forward.
Yeah. No, absolutely. You made a heck of a lot of progress. You would never think we're in a pandemic. But Bill, it's been great to chat to you. Thanks for coming on, do the presentation, answering the questions, and hopefully we catch up in the not too distant future. Thanks very much.
Well, thank you, Justin, and thanks everyone for watching. And hopefully we've given you a good heads up on where we are and where we're going.